Did you know that a Tesla bull believes that Tesla stock will go 50x with just one aspect of the business? Although not everybody may know it, Tesla has several business sectors, including the EV business and Tesla Energy, among others. That said, even if just one business front succeeds, Tesla stock may well possibly go 50x. Make sure not to miss this info. Now, you have $1.4 trillion in net profit, and your market cap, you're starting to talk about a $40 trillion market cap, which is 50x where Tesla is. It's 40 or 50x where Tesla is today, said Tesla bull Warren Redlich in a recent video with Randy Kirk. Warren Redlich began making videos about SpaceX, Tesla, and other related topics in 2019. Today, Warren is prominent in the Tesla community as a super bull. In a recent video on his channel, Redlich talked about his Tesla Robotaxi model. The Robotaxi model is my model of where I think Tesla stock is going to go, where Tesla stock as a company is going to go, assuming that they go heavy into Robotaxi, says Warren. According to Redlich, it's not going to make sense for Tesla to sell Robotaxis to people. Instead, Tesla should deploy vehicles in its own fleet. It's going to make more sense for Tesla to just keep them and run them in their own fleet. Maybe they'd sell them to fleet operators, but it'd be unlikely that they're going to, he said. That said, Redlich thinks that Tesla may stop selling cars to consumers at some point, or at least limit production of other vehicles once the company starts running the Robotaxi fleet. They'll probably still sell Roadsters and S and X to consumers because they're less likely to be Robotaxi fleet vehicles, says Warren. Before we move on, 2022 was a storm for investors, and according to many experts, the sun may not come out for the foreseeable future. Both Goldman Sachs and BlackRock agree the days of "there is no alternative" are over. And according to a recent survey, 88% of financial advisors are increasing their allocations to alternatives in the next 2 years. So no matter the size of your Tesla position, diversification is still important, and alternatives outside the stock market have been seeing huge profit. And $1 trillion asset class had a record-setting year in 2022. It's contemporary art. In the first 5 months of 2022, while most assets were plummeting, Morgan Stanley reported the average price of art was selling for 26% more at auction. And after Microsoft co-founder Paul Allen's sale in November, the art market saw its best auction year ever, with almost $18 billion worth of art exchanging hands. This performance during macroeconomic meltdown is one reason Deloitte experts predict global value of art to grow by 58% by 2026. And thankfully for us, we no longer have to found a major tech company to invest in art, with today's sponsor, Masterworks. Investors like you and I can diversify our portfolio with art for a fraction of the cost. And I'm not talking about NFTs either. I mean Picasso, Banksy, Monet. This is the stuff you see in museums qualified with the SEC. Over 600,000 people have signed up so far, and when you look at these returns, it's easy to see why. Offerings have sold out in minutes, but my subscribers can get priority access at the link in the description. Furthermore, Warren presented an example with the assumption that Tesla will have a fleet of 10 million robotaxis by 2030, assuming that each robotaxi on average generates $50,000 a year in gross profits. That is equal to $500 billion a year in gross profits. 50,000 per vehicle times 10 million vehicles is $500 billion in gross profit. With that, there will be around $350 million in net profit with a price-earnings multiple of 30, which will allow the company $10 trillion in market cap. And that's why I think very conservative assumptions about where Robotaxi would be if they're able to deliver it, Warren explained. He also clarified that his computation is focused solely on the Tesla Robotaxi, leaving out Tesla Energy, AI as a service, and the EV-making sector of the business. It's just that one aspect of the business turns Tesla into a $10 trillion market cap, he said. Taking a step further, Warren shared that the world currently has around 2 billion vehicles, so people may wonder about the Robotaxi's total addressable market. 10 million Robotaxis might replace 50 million cars, but each vehicle may replace in the ballpark of 5 cars. So 10 million vehicles replaces 50 million cars. You're a long way from denting the 2 billion. But suppose Tesla had a fleet of 100 million vehicles. 100 million robotaxis in multiple countries now, and the average robotaxi only makes $20,000 a year in gross profit. So we've increased the volume of vehicles by 10x, and we've reduced the profit from $50,000 a year to $20,000 a year. Warren explained. That said, it's a 2.5-fold reduction in the profit per vehicle. In that case, there will be $2 trillion in gross profit instead of $500 billion. Now you have $1.4 trillion in net profit, and your market cap, you're starting to talk about a $40 trillion market cap, which is, 50x where Tesla is. That's, 40 or 50x where Tesla is today, said Warren. So if your stock is currently trading at $200 a share, your stock is now trading at $10,000 a share, he concluded. It can be noted that Redlich, a known Tesla bull, previously shared his belief that the EV company's stock may be worth $40,000 per share by 2030. He explained that Tesla is so far ahead of other companies building electric vehicles, partly because of their making full self-driving, FSD, almost ready for general distribution. He then gave the battery revenue model to demonstrate the amazing future value of Tesla and accordingly the price of their stock. According to the said model, $30,000 car, 50 kilowatt-hour battery pack, $600 per kilowatt-hour revenue, $600 million per gigawatt-hour. At 1 terawatt-hour, Tesla does $600 billion in revenue. Aiming for 6 terawatt-hours in 2030, that's over $3 trillion in revenue. With a price-sales ratio of 5, that's a $15 trillion market cap. It's by calculation that the share price of Tesla stock is headed toward or becomes more than $10,000 per share based on the current price and not including any possible share price splits. While others raised questions such as, what happens when Ford, GM, and VW all produce electric vehicles, Warren simply dismissed them as true competition because they are so far behind Tesla FSD. Besides the battery revenue model, Redlich presented another model called the Robotaxi model. When asked how Tesla can move to an unreal valuation, he said that these two models prove exactly how Tesla will flourish in the near future and that the seemingly high valuations are realistic. Talking about his Robotaxi model, he said that during the Autonomy Day presentation, Tesla CEO Elon Musk said, in a side note, we're going to have a Tesla-owned Robotaxi fleet of 10 million vehicles. He also said that each Robotaxi will make $30,000 in profit a year. That is $30,000 in profit for individuals who own the vehicle and run it as a Robotaxi, not the Tesla-owned Robotaxi fleet, according to Redlich. Assuming these numbers, there will be 10 million vehicles making $30,000 in profit a year. Redlich emphasized that for him, these are both understatements of where it's going. Again, assuming these numbers, 10 million vehicles making $30,000 in profit a year is $300 billion in profit a year. Fast forward to the year 2030, for example, and there is a price-earnings ratio of 30%, which is massively low compared to a company that is growing as fast. Leaving out all revenue from Tesla, all profits from Tesla Energy, as well as all profits from selling cars, and the company is supposedly making 20 million vehicles a year at this point. Therefore, a price-earnings ratio of 30%, that's a $9 trillion market cap, is a $9,000 share price. That is a $9 trillion market cap and a $9,000 share price. How much would you pay today for a stock that's going to be worth $9,000 a few years from now? It would be $2,000 or $4,000 per stock, and it is currently trading at around $700 a share. This is an understatement of the Robotaxi model, and it leaves out the battery revenue modeling, as it leaves out Tesla Energy and Dojo as a service, according to Redlich. He added that there's so much potential in Tesla for revenue. In a recent video, Redlich discussed why he thinks Tesla will quadruple by the end of 2023. When we get to January 21st or so of 2023, we're going to have the Q4 numbers. We're going to have a really good idea of what 2023 looks like. We're going to see that earnings per share is going to top $10 a share, and that pushes the stock up closer to $600, a share which is effectively a doubling from the sub $300 we're at now, says Warren Redlich. Note that this prediction was made a few months back before the EV company's stock plunged to its current valuation. He is confident that when all Tesla factories ramp up production, it only provides great news for the company. As the growth continues, as Giga Texas ramps, as Giga Berlin ramps, as Shanghai continues to grow, as Fremont continues to grow, you can start to process, okay, how many vehicles is that for 2024, right? More vehicle deliveries mean more revenues, which is very welcome news for Tesla investors. We're looking at probably not quite achieving 1.5 million vehicles in 2022. We're probably looking at more than 2.5 million vehicles in 2023. The total vehicle deliveries in 2023 may be approaching 3 million. By very likely, we're going to hit 2.5 million in 2023, says Redlick. Moving forward to 2024, he expects delivery of around 4 million vehicles. He said, in order to hit 4 million vehicles in 2024, you got to be doing close to 1 million vehicles a year. If that happens, there's going to be another doubling in stock price, according to Redlick. That's why I think you're going to see that second doubling, because as we're looking out to 2024 and we say $20 to $24 a share, and you give it a price earnings multiple of 60 for $20 a share, maybe more, you're looking at $1,200 a share early January of 2024, says the Tesla bull. Redlick added that it may happen sooner than that if either Wall Street or big investors catch on. With the Robotaxi network starting by the end of 2023, that's game over. 4x isn't even close. It's going to be bigger than that, Warren Redlick said. He noted that given that there will be no more war, supply chain issues, or a threat of another pandemic sweeping the globe before that, things are looking up for Tesla. The Tesla team knows what they're doing. All of this stuff is baked into what Tesla's doing already. Even without Elon, they should be 4x by the end of 2023, he said. Make sure to subscribe to this channel.